And yeah, I have rules based on that. My strategy it's a 5-rule strategy. It's the one that I talk about a lot. And those dictate my entries, my exits, identifying trades, everything, all within
5 rules.
rules. It does my sizing, my profit taking, everything, all within those 5.
Is it proprietary, or can we talk about the 5 rules?
No, we can talk. Absolutely, I talk about it all the time. It's real simple.
Let's hear it.
So 5 things: higher lows, price support, higher highs, pattern break, and the 200-day. So either above or below the 200-day.
So Kyle,
higher highs. Yeah, say again.
Put that on a chart. Draw out what he just said.
Yeah, is that Wyckoff, the Wyckoff shakeout
everything
that you're always looking at?
It's everything.
Yeah,
I would say that those 5 rules encompass 99% of all trading strategies in the market.
Say it one more time for us.
So first thing you look for is a higher low, a level of price support or resistance, higher highs, a pattern break, so either diagonal or horizontal.
Okay.
Change of character.
And then the 200-day moving average.
I like that.
That's it.
What's your typical hold times on these?
Awesome. About 45 days.
Okay.
So, but those numbers are skewed a little bit. I will caveat, those numbers are skewed because a quarter of every position I take, I plan to leave on for as long as possible. GE is a good example. I've been in GE for 3 years.
Okay.
And it just keeps going. The chart has given me no reason to get out. And I've made more money on the runners than I made off the initial trade.
Right.
Because I left a quarter of the size on and it just keeps going. So why would I stop? Gold's the other one. Gold has now become my largest trade ever. I've been in it for 2.5 years.
Oh, damn.
And it just keeps fucking, and it's not going to stop. And I would say that too. Gold is nowhere near stopping. So,
I mean, that begs some questions there. Are you not a believer that inflation's going away?
Gold says that gold is inflation.
Yes,
if you want to see the chart of inflation, look at gold.
Right.
Kyle, how do you say that with a straight face?
I tried. I almost got it out.
Yeah, really. Gold is inflation.
Yeah.
And it's not. So. But yeah, those are the 5 rules. They dictate everything, with the caveat of, again, a quarter of all positions I plan to leave as long as possible. Most of the time it doesn't work. 95% of them, the trade will move up. You take profits on the way up, and then at some point it starts to turn around and come back. It goes below break even, and I'm out. That's the thing. I don't hold a losing trade. Right? Like once it comes back and it hits break even, I'm out. But that quarter of the position, I'll leave it as long as possible. I try to leave leverage on when possible with leaps. But eventually, time runs out. And so I do take shares frequently with things to try and do that, because then at least I'm getting something. No, I'm not getting, 6 times leverage on shares. But it's, again, like with GE, even with no leverage, I've made more off of the runners than I did the initial trade.
Right. Huh. So, sounds like you're executing on like a basket of different, God, what's the right? I can't think of the fucking terms today. A basket of different like products. You're not just options, you're shares, you're not just futures, you're kind of like a little bit of everything, it sounds like.
Yeah. I do a little bit of everything depending on what account I'm operating in. Because I have 8 accounts. Depending on which account I'm in, different ones have different sizes. 4 of those are retirement accounts. So my 401k, my wife's 401k, my IRA, her IRA. I have 2 trading accounts and then 2 wealth accounts. So the trading accounts have very kind of loose rules in terms of what I can buy or whatnot. I don't go shorter than 90 days for options, because my average trade time is about 45 days.
Yeah.
At 45 days, theta kicks in really hard. So I have to stay out past 90. I like to stay a little further out.
Are you typically going in the money, out the money? Like what sort of delta are you looking at?
So I like to stay around 50 delta.
So I'm pretty much near the money.
So that's pretty much at the money or a couple of strikes out. Again, depending on what the asset is. If there's, I don't go really far out of the money. At most, it'll be a couple of strikes out. Like if there's an obvious part, an obvious point on the chart where there's a lot of resistance and it looks like, okay, it may reject there or something. And it's maybe 4 or 5 strikes out of the money. Okay, I'll go there. But no, usually it's at the money. And that's just because it's easier for me to control my delta and to understand what my risk is. Because every position is based off of risk. It's not like a flat, $1,000 per trade or 10 contracts per trade. Like everything is based off of risk. So, and then related to the rules really quickly. So I have 5 rules. If it meets all 5 criteria, it's a 5% position. If it meets 4, it's a 4% position. If it meets 3, it's 3. And I don't take anything less than 3 criteria. If it doesn't meet at least 3, I don't touch it.
I see some wheels turning over there, Bear. You liking that there?
No, I really like that.
Right.
Keep it simple approach to sizing and everything else. It's very, very clear.
Yep.
It's beautiful.
Yep. And it's that way because I came up with it while I was a consultant working 60, 65 hours a week. I didn't have time. Like I don't have time to make these decisions. I don't have time to worry with the charts. I don't have time to watch it during the day. I could squeeze, 15 minutes at the market close to kind of check and see what things were going on. And, that's when I could enter positions. And then past that, I would just have my, profit taking orders and stop losses set, kind of as a bracket order and just leave them good till cancel or good till close. And so, by default, I just had to automate my trading. And that's how I ended up doing so well with Tesla in 19 and 20.
Oh God, yeah. If you kept a 25% runner on that.
Yeah.
Yeah, like I had so I went very heavy on the trade, but I was so busy that like when it first happened in October, it closed above the 200-day. It met 3 of my criteria, or actually it met 5. It met 3. At the time, I only had 3. I didn't have all 5 back then. It met my criteria. I said, okay, I'm going to take it. And at the time I was doing 20% per position. So I would do 4 long positions and then 20% of my account for iron condors. And I had about a $60,000 account at the time. And I went leaps with Tesla. I think it was like October 19th before they had the big run. And I didn't check it for like a week and a half. I didn't check it for like a week and a half. I didn't check it for a week and a half because I was flying back and forth to Boston, working on a client. Like the managing director was a real pain in the ass. And like, I was so busy, I didn't have time. And I pulled it up and my account had gone from $60,000 to like $400,000.
Jeez.
Yep. I remember that month very well. Yeah.
Yeah. Like every day.
I was in shares, but yeah.
Every day it was up like 70%.
So what'd you do at that point then?
Yeah.
I mean, I assume you closed some of it out, right?
Yeah. So immediately I closed like a quarter of the position because I was just like, I've never seen this much money. Like I have to close it.
Yeah.
But then, I think I had gotten like March 21, like 55s. So I actually, at that time I was buying out of the money because I didn't have a lot of money in my account.
Yeah.
Relatively. And I was like, okay, I'll buy a little bit at the money, but then I'm going to buy some out of the money. And so I just went as far out as I could. They were like 55s and the stock went to like $500. So the 55s were like
Jesus.
30 strikes in the money.
Right.
So I was able to close some of them, but a lot of them I didn't. Like the majority of the position, I wasn't able to close it because it just goes so deep in the money. You can't
actually even find someone to execute that trade.
Yeah, you can't. I tried for weeks and you couldn't close them.
How big is the spread?
Yeah, so I ended up just having to execute them, but I mean, still made a shitload of money.
Worst things to complain about, right?
Yeah. So so in 19, my returns were, I think, like 510%.